Hello, everyone. Welcome to our platform, EPSMomentum.com. What we have here is probably one of the very important tools that you can use for earnings season. It will help you pick stocks with unique indicators and scores and ratings that you won't find elsewhere. So we are going to start straight away with our monitor, our chart, and our quote, advanced quote, and basic quote here, where we have the ability to put some charts here as well. And also enlarge the quote as we wanted to have more information. But so let's start with the chart. I want to prepare you for this earnings season. So I want you to go, I want you to understand one of the concepts that we have here at EPSMomentum, which is our earning momentum. So I am going to click on models, click on EM, and I am going to insert the earning momentum there and click on apply. As soon as I do that, you will see the EM score that shows up every quarter with the EPS change, sales change, and so on. Really, really every earning quarter you have that little earning momentum score that shows up. So what is this score? It's a score between -50 and +50, and it takes into account earning per share, sales, profit margin, and free cash flow. So I am going to pull up the earning analysis tab here, earning analysis widget, and I'm going to position it at the bottom here. So let's review it a little bit. So this is a matrix, as you can see, that presents the earning per share, the sales, the profit margin, or the free cash flow, depending on what you want to see. So we can start with the earning per share. We can see the last number, which is 1.57. Previous one was 1.4. The growth in between those two numbers, so a year ago, this quarter and a year ago, is 12%. The acceleration is 4%. And the surprise was 10% when they published the numbers. And this quarter, it was up 23%. If I pull up like IBM, obviously have different values. I have EM -10. So the reason it's -10 is because, well, let's have a look at the earning per share. It's good, positive growth, positive acceleration, pretty good. And I'm switching to sales. Here we have sales that are 7% is positive, great. It's accelerating a little bit, but not to a great extent, I would say. Single digit. And so there's some stocks that are a little bit better than this. So it takes a little bit of a beating. That rating takes a little bit of beating there. Profit margin wise, it's improving, it's accelerating, so that all looks good. And free cash flow doesn't look good at all. Decelerating, major drop, negative, so it loses a ton of point there. So we have a negative EM here. So let's pull up another name, Microsoft. Microsoft -4, -8, -12, -6. So we have various numbers. Let's pull up someone who has a positive EM. So for example, AVGO here, Broadcom. So what do we have with Broadcom? EM 25. Okay, so now we're talking. Now we have a story. And let's see how that story unfolded over the years. Right. And we can go back to 2016 or even 15, a long time ago. All right. So here in 2015, we have an EM12 and an EM30 at $9. Right. Broadcom is $337 now. So that would be some sort of a, don't miss this one signal back in the days. And then we have a other opportunity. So it did kind of take a little bit of dip here at -9, but then 7, 13, 18, 5, 1, 6, you know, all that, and then negative EM again, and then negative EM turns positive EM, then turns very positive from 9, 4, 23, 27, 18. So beginning of a rally here, and it actually goes parabolic from there. And EM 31, maybe the beginning of another rally, 31, 24, 25, and another parabolic. So that's the story there. We can always look at earning per share. We can look at sales. So sales is greater than 20% here. Earning per share is greater than 30%, so 36%. It's decelerating, so that's a little bit of a dark point here. But sales is positive and accelerating. Profit margin is exploding, meaning improving. And the free cash flow here is growing. It's getting better, but it's decelerating a little bit. But it is positive, getting better. So more money coming their way, about 3 billion. So yeah, so this is unique on the chart. You can see the fundamentals improving or not. That's first off. So if you really want to see the fundamentals, you can go into earning per share, sales, profit margin, and free cash flow, or EV over EBITDA, and just display them below the chart. And here you have it, right? So you can see over time if all these values have been improving or decreasing, pretty easy. So I click on data set, I remove them, and so on. So staying on earnings, since we're in earnings season, let's do something and let's look at the revision score. So what is the revision score? So for this, we are going to pull up the estimates revision piece. So this is the estimates revision widget that I see in this corner. What you see there is the revision score, the estimates from all analysts. So if I go at the bottom, I have a table with all of the analysts pushing their values. So there's 11 analysts here. We have two sources, source 1 and 2. One with 11 analysts, the other one with 35 analysts. So what you can do is you can see what these analysts have been saying a day ago, 2 days ago, 5 days, 7 days ago, but also 30 days, 60 days, 90 days ago. And you can see what was the value for this quarter, next quarter, 6, 7, 8 quarters forward, and also annual 25, 26, and 27. Of course, it's difficult for you to digest all this and to digest the change. So we've made it simple for you. All the changes and all the things here are recorded and are into one single line. So this is the green. Let me remove the price here and remove sales. This is one single line. This is the revision score estimates for the stock. So over time, every little dotted line here is an earning season. So you see how there's an earning, there's a jump, or after earning, there's a bit of a jump or correction. So analysts are revising their estimates as we go. And then we can overlay with price. We can overlay with sales, estimates revision. So this is very interesting. So now we're capturing the growth of it. So what we see is they reported on the 4th of September. We see a little bit of a kind of a turnaround. So it goes up and down here. Minute little increase, maybe a 90-day increase, 3.5% from 90 days ago. And the second source gives us different view, 11% increase and 52% increase over 90 days. For sales, increase as well. So the change in the actual score was 1.2 point or 6.3 points on source number 2. The competition here is also doing well, both earnings per share and sales. All the estimates are getting revised up except Intel. Yeah, no surprise there. And yeah, you can also see the consensus, so whether analysts agree or disagree. So it looks like for 2027, there's a little bit of disagreement. There's about 2 standard deviation of disagreement between analysts. So it's not yet settled what 2027 will be. So yeah, there's some discussion there. So so maybe there's something to follow there. Okay, so once we have this, we can have it on the chart. So let's do this signal, and then data set, and then we pull up the revision score, earning per share revision score, RS, sales RS, FinHub, two sources. Let's pull it from Zacks. And what we see is an upward curve going higher up. It looks all rosy, but obviously if I pull up another name, say GE, I'll have a different picture where I can see, so this is, kind of rescaling. So improving as well, but still, sales not improving. I mean, improving lately into last earning, but still way to go. Okay, you can follow this on our main monitor, main quote, advanced quote that you can see. 2 reds, 1 red for fundamental, and then a red for price action and major moves. So here we're not looking at a particularly green picture, but you can see all the earning per share change, sales change, acceleration here and there. So pretty decent thing there. So now that we have the estimates revisions, we have the earnings, we have the earning momentum. This is great. What I am going to do, I am going to go to the screener, and I'm going to click on filters here. Filtering. I'm going to remove all the current columns that I have. So I start fresh with a clean set of columns. And then I'm going to start with earnings momentum. EM earnings momentum. So earnings momentum here, maybe we've learned that a positive EM would be appropriate here. So let's put it greater than 0. We have 1,000 stocks there. Great. The other thing we can do is we can look at estimates. So EPS, earning per share, revision, I call it RS, or you can just type revision score. And you have the revision score for earning per share, for sales in percentage or in value. So I'm going to take the earning per share revision in value because I want I mean, I can put it in percent as well, but value is a bit better to compare things with like apples to apples. So we get, we put 0, for example, so we want it to be positive. So we have the possibility to have a look at the revision score since the earning day from 90 days ago, from 7 days ago, or from the current quarter. So I can put like 7 days ago or from the earning day. I'm going to put earning day and now have 614 names. Okay, so this is good. The other thing that I want to do the same for sales. I want sales to also improve. So I want it to be 0 here and add. And yeah, this is what I have. Actually, you know what? I want to put 0.1. So at least positive by a dot. And same for the other one. I'm going to put 0.1. Same. Okay. So now we have 427 names. And click on the name and see what we're looking at here. Actually, what I can do, I can switch this widget to chart. And switching to chart, this is what I have. I can insert my EM, my RS, sales, revision score, sales, earning per share, and sales. And this is what I have. Okay. I think we're good so far. One thing that I want is maybe the earning date. So I can type the word date and I can go, I mean, of course, I can go into earning per share, estimates, revisions. I have different categories here. Earning report date. So earning estimates is the earning report date or next report date. So I have the two dates here, two sets of dates. And I can filter by relative dates or by a specific date. So if I want to filter for, let's say, stocks that, so what are we looking at here? This is the next report date. So I want, yeah, I want the next report date to be, hold on. All right, no. So during earnings season, what you do is you play around with that report date. But what we can do here is we can say, give me all the stocks that reported 30 days ago, add that have the criteria that I've just put in, right? So I can do that, or I can do absolute, and I can do from a specific date. Okay, so you select your dates clearly here. And then once you're done, you can just run the analysis on, click on the stock and, have a look at the results of each of them. Now, one thing that is important is, I think, in my opinion, if you want to screen for stocks, is maybe the distance to high. Distance to high has always been something that kind of help you focus on the winners rather than the losers. So, maybe a 20% distance to high is something that you want to put in. So I'm adding that in, right? And that's it. So I can focus on stocks that are 20% away, 10% away, and so on. I have 329 stocks here. That looks great. Now, when I click on one, I can see where it is. Obviously, it's 20% from its 52-week high. The other thing that we can do is we can create another filter for the 20 days. So I want in the last 20 days for the stock to just literally make its high or be close to its high. So let's say 5% away from its high over the last 20 days. So I'm going to do distance to high 20 days and distance to high 52-week there in two different columns. So these stocks are making their highs for 20 days and also the 22 days, but not always. So this one, for example, is 10 days away from its 52-week high. Sorry, 10% away from its 52-week high, but it's making a 20-day high, right? So now we have a stock that is in positive momentum, I would say. You know what? Let's be super stringent here and let's put like a 1%. Okay. Sunrun, for example, let's have a look. There you go. Get that 20-day high, almost making 52-week high. Residual technology. And by the way, we can also have the all-time high, right? Well, actually, not the all-time, the 5-year. All-time we'll implement a little bit later, but the 5-year high is also important. Why not? Because why not? 0 and let's say 30%, right? Actually, you know what? Let's go 20%. So we know that we don't have stocks. Okay, so how many stocks we have here? 55 stocks. So 55 stocks that are at the high on 20 days, almost close to their highs on 52 weeks. So this is one. We don't have any restriction on the sales revision score here, or do we? Yeah, we do. Looks really flat here. Oh, I guess it's just improved slightly a little bit there. And let's filter from distance to high. Okay. So these stocks are a little bit far away, but close on the 20-day fashion, right? Almost there, almost to the high. Stepstone group, almost there. Almost. And Vetiv holding, this is interesting. So Leidos holding almost at its high. So let's see if we get something. So what you want to see when it breaks out from the high is also a significant institutional participation. So power days is one of the things that you want to see. We can put the last power day, and we can put the number of days from the power day, and we can put the power day trend, and then we want that trend to be positive. So you'll see what power day is. I'll show it to you on the model, on the chart, sorry. You go into model, power day, and then you go into power days here as well. And then you have the histogram of what's really happening on the stock. So you see positive green histogram power day here of 5.67 standard deviation, -2 standard deviation, and then about a half one here. So it's positive, all ready to go here. And it's really, really interesting. Reaching their high, Sienna, it's already up there. NVIDIA, right. So interesting name here is ResMed, RMD, right? So here, almost touching the high again. We get a positive power day of 2 standard deviation. It was a big battle here during earnings. Then negative push that resisted, and then the first positive push in quite a while. So that's maybe something important here. Eli Lilly, power days here, almost at its high. Yeah. Few percent away from the high. That's very good. So when you have your earnings, you can filter for EM, filter for revision score, and sales, and then distance to high, power days, and then you can add on the scorer here. I'm not going to go into the scorer, but I'll let you discover it. You can score quickly with 2 or 3 criteria. Click on run, and I will run it, and then you'll have the list of all your results here, and it will filter out for the best stocks based on the results that you, or the criteria that you put in. All right, so that's it for me. I hope it was useful, and I really want to get you prepared for that earnings season. So let me know if you have questions. Message us at support@EPSMomentum.com. Thank you very much for your attention.